Good evening, everyone, and welcome. Major news breaking on multiple fronts in technology late today. Apple and IBM announcing a landmark partnership to develop apps and business software for use by corporate employees on iPhones and iPads. Both stocks moving higher in early post-market trading. We'll have more on this once unthinkable deal in just a moment. But we begin tonight with after-the-bell earnings from two tech bellwethers, Intel and Yahoo. First up, the computer chip maker Intel. It reported better than expected revenues and earnings, net profit up nearly $3 billion on strong demand for personal computers and the chips inside them. Excluding certain items, Intel pulled down 55 cents a share. That's 3 cents better than analyst estimates. Revenue, nearly $14 billion, also topped the forecast. Shares of the Dow component rose as much as 3% in after-hours trading. Seema Mody joins us now from the NASDAQ marketplace with more on Intel's results. Seema, from where you sit, what's the one big takeaway on Intel? It's
the rebound in the PC market, Tyler. That's what investors are really talking about, showing signs of growth in an industry that at some point was telling investors that there was a lack of growth, but clearly the personal computer market still adding value to Intel. Management does see opportunity there going forward. In fact, it gave a strong forecast for the current quarter and the year, citing PC shipments.
Okay, don't go away, Seema. We're going to be right back to you. Next in the profit parade, Yahoo. The internet giant earned 37 cents a share, excluding certain items, disappointing investors with a 1 penny a share miss. Revenue was also short of forecast, just topping $1 billion, even though rates for online display ads fell by a staggering 24%. Yahoo shares were initially up 2% in late-day trading. So let's turn now to Seema again. What's the big takeaway here about Yahoo's results?
Well, results did come in below street expectations due to a decline in display advertising sales. But it was news on its Alibaba stake, the Chinese internet player that is expected to go public in early August. That's what investors were really focused on. Yahoo said it will return at least half of the after-tax IPO proceeds to shareholders. It's also reducing the number of shares that Yahoo is required to sell at the Alibaba IPO to 140 million shares from 208 million shares. So basically, when reading through the notes of the Yahoo earnings report, it's really trying to capitalize on the Alibaba investment as its core business continues to struggle. Back to you.
Thanks a lot. Seema Mody reporting from the NASDAQ.